Ever felt stuck between a rock and a hard place? Like really stuck.
Yeah, I think we all have.
It's like how I felt when I was dealing with my student loans, right?
Oh, student loans. A classic.
But at the same time, I'm hearing about my friends. They're like making a killing in the stock market.
Oh, the FOMO is real.
It's the classic, should I pay off debt or invest?
Yeah.
Dilemma. It's like, which way do you go, you know?
Definitely. A lot of people face that. I know I have.
And that's what we're diving into today using Debt versus Investing. A comprehensive guide. It's a great resource.
Oh, yeah, I've seen this guide. It's pretty comprehensive.
We're going to try to help you, dear listener, figure out, like, what's the best move for you.
Yeah, because everyone's situation is different.
Exactly. And this guide, it dives into the psychology of debt, which I think is super interesting.
Right. We always hear about good debt versus bad debt.
Yeah, good debt, bad debt.
But even that good debt, it can really, weigh on you.
Oh, totally.
It's like this feeling of being tied down, and it can totally mess with your financial choices.
Yeah, even when you know, like, logically it makes sense. You're like,
Yeah.
but I just feel this weight.
Exactly. And the guide, it points out how this is even stronger with, high interest debt, stuff like credit cards.
Credit cards, oh, yeah.
That's where things can get really out of control because of compounding, you know?
Compounding, that's where the interest you owe starts making more interest.
Yeah, it's like a snowball effect, but in the wrong direction. It just keeps growing.
So, okay, we've established that scary credit card debt, that's got to be like a top priority.
For sure.
But then there's this other side of the coin, investing.
Yeah.
And it's hard not to get FOMO, right? When you hear about people making tons of money in the stock market, real estate.
It's so tempting. You see those headlines?
I'll admit I've been tempted by a hot stock tip or two myself.
We've all been there. But the guide is really good because it reminds us that chasing those high returns usually means taking on more risk.
Right. Higher risk, higher reward.
Exactly. It's like instead of putting all your eggs in one basket, and then if you drop the basket,
Everything's gone. Splat.
you want to spread out your investments across different things, stocks, bonds, real estate, that kind of stuff. That's what they call diversification.
Diversification. Okay. So it's not just about picking the hot stock that everyone's talking about.
Right. There's more to it than that. It's about strategy.
So there's more nuance to investing than just picking a stock and hoping for the best.
Definitely. One of the most powerful ideas the guide talks about is compound interest.
Compound interest. Okay, tell me more about this.
This is where things get really exciting.
Yeah.
So imagine you put away, say, $50 a week.
$50 a week, okay.
With compounding, over 30 years, that could turn into over $200,000.
$200,000 from $50 a week. Are you serious?
It's because you're basically earning interest on top of your interest. It grows exponentially.
That's incredible. But, for someone like me who is still, dealing with those student loans, trying to tackle both debt and investing feels overwhelming. Like, where do you even begin?
I get it. A lot of people feel that way. The guide talks about that feeling. It's really common. And it introduces these two popular ways to pay off debt: the snowball and the avalanche.
Snowball and avalanche. Those sound intense.
Maybe a little, but they're actually pretty straightforward. So with the snowball, you focus on paying off the smallest debts first. It doesn't matter what the interest rate is.
Okay, so you knock out the little ones first. Got it.
Right, and then each time you get rid of one, you take that money you were paying and roll it into the next smallest debt. So you're building momentum,
Ah, I see. It's like a snowball getting bigger as it rolls down a hill. That makes sense.
Exactly. Now, the avalanche method is a little different.
Okay, how's that one work?
So with the avalanche, you target the debt with the highest interest rate first.
So you're tackling the one that's costing you the most in interest.
Right, that's where you can potentially save the most money in the long run.
Okay, so it's more strategic. But I gotta ask, which method is really better? Which one actually saves you the most money overall?
That's the thing. There's no one right answer. The guide makes that really clear. The best method depends on your own situation and, honestly, your personality.
Really? So it's not just about the numbers?
Not entirely. The avalanche method might be the most efficient on paper, right? But if the snowball method keeps you motivated and on track, it might be a better fit for you personally.
Interesting. So it's about understanding your own financial psychology, not just crunching the numbers.
Exactly. And that's what's so great about this guide. It really gets into the individual factors. There's no one-size-fits-all approach to paying off debt.
Just like there's no magic formula for investing.
Right.
Okay, so let's get specific here. The guide talks about a few different scenarios. What if I'm drowning in credit card debt, like really drowning. What should I focus on first?
Well, if we're following the guide's logic, you got to tackle that high interest debt first. It's like putting out a fire before it spreads everywhere.
Okay, so high interest debt is priority number one.
Yeah.
Got it. But what about someone who has a low interest mortgage, like a lot of homeowners do? Should they still be investing while making those mortgage payments?
That's where things get interesting. The guide says, yeah, it is possible, but you have to be really careful and smart about it. You still got to make those mortgage payments, obviously. But you might have some room to invest a little bit too, especially if the interest rate is really low.
So it's about finding a balance, right?
Exactly. Not ignoring one for the other.
Got it. And this is another key point the guide makes. Building an emergency fund.
Yes. So important.
Having 3 to 6 months of living expenses saved up, it's like having a safety net, right?
It's like your financial cushion. No matter what happens, you've got that backup.
Right, that emergency fund is like a must-have.
Hmm.
But I'm curious about, like, the psychological and behavioral stuff that the guide touches on. It seems like our emotions play a huge role in our financial choices.
Oh, absolutely. Huge role. Even when we know logically what we should be doing.
Yeah, like we have emotional attachments to debt even when we know we need to get rid of it.
Right. And then there's the whole impulse spending trap that can really sabotage your progress.
Oh, impulse spending. Don't get me started.
We'll talk about some tips for dealing with that later, but it's a big thing the guide highlights.
Ugh, impulse spending. I know all about it. It's like a cute pair of shoes, a sale online, and suddenly your budget is out the window.
It happens to the best of us, but with some strategies and discipline, you can break those habits. The guide really emphasizes the importance of financial discipline.
Yeah, discipline. That's key.
Like building those habits of saving and investing consistently, that makes a huge difference over time. It's like building financial muscles. The more you use them, the stronger they get. It's like, making those good habits automatic. And the guide also talks about how, like, if you're feeling overwhelmed, getting some advice from a professional can be really helpful.
Yeah, totally. It's like having a financial coach, right? Someone to, like, help you figure it all out.
Mm-hmm.
Speaking of personalized plans, the guide has a bunch of different scenarios it walks through, doesn't it? Like, what if someone's got a ton of student loan debt, but they're also, like, excited about investing for their future? How do you balance those two things?
Oh, that's a great question. And yeah, the guide addresses that specifically. It suggests that one way to do it is to prioritize like a portion of your income for paying off debt. But at the same time, you're allocating a smaller chunk to investments.
So it's like you don't have to completely put investing on hold just because you've got debt.
Exactly. You can make progress on both. It's about finding that sweet spot, right?
That makes sense. It's about finding a strategy that works for your situation.
Yeah.
But you mentioned diversification earlier. Can you break that down a little more? It sounds like it's pretty important for investing.
It's super important. Basically, it's about spreading your investments across different asset classes.
Asset classes. Okay, so instead of putting all your money in just stocks, for example.
Right. You'd want to have some in stocks, some in bonds, maybe some real estate, even things like precious metals. It helps to lower your risk because if one area does badly,
it doesn't wipe out your entire portfolio.
Exactly. Diversification is like a safety net for your investments.
I like that analogy, a safety net.
It can also help you get more consistent returns over time. And this ties into the whole risk tolerance thing that the guide talks about.
Oh, right. Risk tolerance. So someone who's comfortable with more risk might invest more heavily in stocks.
Yeah, because stocks have the potential for higher growth, but they're also more volatile, meaning their value can go up and down more dramatically.
Got it. And someone who's more risk averse might stick more to bonds, which are considered safer.
Right. They might not grow as fast, but they're less likely to lose value quickly.
So it's about finding that balance between risk and potential reward.
Yeah.
And knowing how comfortable you are with, the ups and downs.
Exactly. And, this all connects back to the psychology stuff we talked about before. Our emotions can really affect how we see risk. The guide mentions this thing called loss aversion.
Loss aversion. Okay, what's that?
It's basically where the pain of losing money feels way worse than the joy of gaining money, even if it's the same amount.
Oh, I totally get that. Like losing $100 feels way worse than gaining $100.
Right. And the guide says understanding these biases can help us make better decisions, especially when, our emotions are running high.
That's super helpful. It's like we need to be aware of these mental traps. Are there any other biases that we should know about?
Oh, yeah. There's one called confirmation bias, which is where we tend to look for information that supports what we already believe.
Even if it's not true.
Exactly. And it can lead us to make bad investment choices, like basing our decisions on gut feelings or rumors instead of facts.
So it's really important to do your research and be objective.
Absolutely. The guide really encourages people to be active learners, question everything.
That's great advice. But for someone who's just starting out with investing, it can feel overwhelming. Like, where do you even begin to learn about all this stuff?
Well, the guide is actually a really good place to start. It explains the basics of investing. It talks about different types of investments like stocks, bonds, mutual funds, ETFs.
ETFs. What are those?
Exchange-traded funds. They're like baskets of stocks or bonds that you can invest in. And it also covers different investing strategies.
Okay, so it's like a crash course in investing.
Exactly. It makes it easy to understand, even if you're a beginner. But it also goes deeper than that. It talks about more advanced stuff like factor-based investing.
Factor-based investing. What's that?
It's where you look at specific characteristics of companies, like their size or how much they're worth or how their stock price is moving, and use that to try to beat the market.
Wow. That sounds complicated.
It can be, but the point is there's always something new to learn in the world of investing.
Yeah, it's a lifelong journey, Rich.
Exactly. The guide stresses that investing isn't something you just set and forget. It's about staying engaged, doing research, and adjusting your strategy as needed.
This has been so helpful. But before we wrap up, I have to ask one more thing. The guide does a great job of explaining both sides, right? Paying off debt versus investing.
Right. But what if there's a way to, like, combine the two?
Yeah. Like, is there a way to accelerate your debt payoff while also growing your wealth?
That's a great question, and it's something that a lot of financial experts are talking about these days. One approach is something called debt optimization.
Debt optimization. Okay, I've never heard of that.
It's basically where you figure out the best way to allocate your resources. You're making progress on both debt and investments at the same time.
So it's like finding that sweet spot where both strategies can work together.
Exactly. It's about looking at your finances as a whole and coming up with a personalized plan.
This is blowing my mind. It's like a whole new level of personal finance. But that's what these deep dives are all about, right?
Totally. Challenging our assumptions and exploring new possibilities.
So for anyone listening who wants to learn more about this stuff, what would you suggest?
Well, the guide talks about some great tools you can use, like budgeting apps, which can help you track your spending and figure out where you can cut back.
Yeah, those can be really helpful. I use one myself.
And then there are debt repayment calculators that can help you figure out how long it'll take to get out of debt based on different strategies.
Those are great for getting a clear picture.
Absolutely. And then there are investment calculators, which can show you how your investments might grow over time.
The power of compound interest.
Exactly.
And for anyone who wants to dive even deeper, there are tons of websites and other podcasts out there that focus on personal finance.
It's amazing how much information is available these days.
Yeah, knowledge is power. This has been an amazing deep dive. I really hope our listeners feel like they can tackle their own debt and investing journeys with more confidence.
I hope so too. Remember, it's a marathon, not a sprint.
That's a great way to put it. Be patient, be persistent, and celebrate those small wins along the way.
Absolutely. And if you're feeling inspired by today's conversation, we'd love to hear from you. Share your own experiences with us on the show's social media.
Yeah, let's keep the conversation going. Until next time, happy investing. And may your financial journey be filled with, purpose and progress.
It's amazing, right? We've gone beyond just this basic idea of pay off debt or invest.
Yeah, it's not an either situation.
It's more like they can work together, and it's not like a one-size-fits-all approach either.
No, not at all. It's all about, finding what works for you.
Exactly. And the guide, it actually mentions this thing called lifestyle creep. Have you ever heard of that?
Oh, lifestyle.
Yeah.
Yeah, that's a sneaky one. It sounds kind of scary.
It can be. It's basically like when you start making more money and you start spending more money.
Oh, so it's like you get a raise and suddenly you need a nicer car or a bigger apartment.
Exactly. You start upgrading your lifestyle, but sometimes you don't even realize you're doing it.
Oh, I've totally been there.
Mm-hmm.
It's so easy to fall into that trap. One minute you're celebrating a promotion and the next you're like, where did all my extra money go?
It happens to a lot of people. And the guide, it really warns against lifestyle creep.
Okay, so how do you avoid it?
Well, the authors, they suggest being mindful of your spending habits. Really pay attention to where your money is going.
So it's about setting a budget and sticking to it.
Yeah.
Even when you have more money coming in.
Exactly. It's about making conscious choices about your spending. Don't just let it slip away on stuff you don't really need.
Makes sense. So you're not just mindlessly spending because you can. You're being intentional about it.
Right. It's about aligning your spending with your long-term goals, not just your immediate wants. And the guide actually gives some practical tips for dealing with lifestyle creep.
Oh, okay. Like what?
Well, one of the tips is to automate your savings. Like, set up automatic transfers to your savings account or your investment account.
So you're like paying yourself first before you have a chance to spend it.
Exactly. It takes the decision-making out of it.
I like that. That's a good tip.
Another tip is to track your spending for like a month or two, just to see where your money is actually going.
Oh, yeah. That can be really eye-opening. You might be surprised at what you find.
Totally. Once you see it all laid out, you can start making changes.
So it all comes back to that self-awareness thing we were talking about, right?
Yeah. Knowing yourself, understanding your habits.
And then making choices that align with your goals and your values.
Absolutely. It's about taking control of your finances instead of letting them control you.
That's such a powerful way to put it. This deep dive has been amazing. I hope our listeners are feeling inspired to, really take charge of their own debt and investing journeys.
Me too. It's a journey for sure, but it's one that's worth taking.
And remember, there will be ups and downs along the way.
Oh yeah, definitely. It's not always easy.
But with, the right knowledge and a little bit of discipline, you can get there.
Absolutely. You got this.
And we'd love to hear from you. Tell us about your biggest takeaways from this deep dive, or what strategies you're excited to try.
Yeah, share your thoughts with us on social media.
Until next time, happy investing. And may your financial journey be filled with, purpose and progress.